Hi guys, so in this video we are going to learn how to analyze any company within 5 minutes. So these are the filters that I've already added to make sure that we are investing in fundamentally good companies. So let me explain these. So first is sales growth of 3 years has to be greater than that of 12%. Just so that the Nifty benchmark return is 12%, that's why we have at least include a benchmark of sales and profit both 12%. Then a return on capital employed has to be greater than that of the 15%. Just so we need to make sure that the company is utilizing their capital very efficiently. That's why the capital return on capital employed has been greater than 15%. Now next is the debt to equity less than that of 0.5. So what we are looking for is a company with low debt or almost no debt. So that's why we had selected the debt to equity has to be lesser than that of 0.5. Now the next is cash from operations last year greater than zero. Just so we need to make sure that the business is actually generating some cash. That is why the cash flow from operation is greater than that of zero. And the market capitalization, last filter is market capitalization greater than 5,000. So we are looking for relatively large stable companies. So let's run this query. So we have found 160 results. So let's just analyze any one of the companies. So Tips Music. So this is one of the known companies that. So firstly, after opening this page, we would be looking for the company type about, we would be reading about the company just so that we can understand their business model effectively. So here is that the company has a large music library which collection of 30,000 songs across various genres and 40 Hindi films in the past 20 years. And they are also sell theatrical, satellite and various other right distributor and broadcasters as well. Now this is revenue split. The company earns 100% of revenue from license fees and 75% of revenue from digital platforms, where 45 to 50 is from YouTube and 25 to 30 is from other digital platforms. So this is geographical split is also mentioned as well. So domestic it has 27% as of financial year 23 and international it has 73%. Now, manufacturing facilities. The company owns two factories that use internationally recognized state of art and imported from Italy, Denmark, and then distributors. So all these details of the companies and their business model and the distributor, the social media presence, their advertising, everything is mentioned here. So it is similarly for other companies as well. So you can check out about the business model in the right hand side of the section. Now we would be checking debt to equity, as we had one filter of debt to equity. So we can see that debt to equity is 0.02, so which is obviously according to our filter, so it is less than that of 0.5 which we have entered. Just if debt to equity is not coming in your scenario, then what you can do is you can edit ratio and select the debt to equity from here. So now we can see that the market cap is also greater than that of 5,000, which is 8,266 crores. And now this is the price chart. We can see that our stock price is currently above that of the 50 and 200 day moving average. And these are some of the snapshot with they had entered the pros and cons of the company. That the company is almost debt free. The company has delivered good profit of 38.1% CAGR over the last 5 years. So it has also completed our second profit criteria as well. The company also had a good return on equity of 85.7%, and the company is maintaining healthy dividend payout of 63.6%. So it is also a dividend paying company, and the company has a median sales growth of 24.7% over the last 10 years, also fulfilling the other criteria of sales which we already had. Now here what we can see is we can look into the price to earnings. So here we can see that the median industry PE is 37 and Tips Music is 38, which is almost the same as that of the industry, so there is no issue in that. Now here comes the quarterly results. So firstly, what we can check under quarterly results is the sales. So we can see that there is an increasing trend in the sales, and if you want to see the percentage, we can click here, and here are the sales percentage. Now this is expenses and operating profit margin percentage are also given here. Now profit before tax and then net profit, we can also check here what is the net profit year on year quarter, which we can see that the net profit is there in increasing trend. So now next comes the profit and loss, which is yearly. So here we can also check in the sales that there is an increasing trend in sales, and if we want to check the percentage, we can again click here. So we can see that there is 29%, 28%, 20%. Now what we can see is the expenses. If you want to check the details of expenses, the breakup is also given here. Now the operating profit margin is also there, 66, 67, 73% of the last 3 years. Now net profit, if we check the net profit, the company is making a huge profits in the last 3 years, from 127 to 167 and 217 crores. Now dividend payout, also company is paying dividend, so this is a dividend paying company as well. So now what we can see is we move on to balance sheet. So this is the equity capital as of March 2026 is as 13 crore of equity capital, reserves are 247 crores, and borrowing here we can see that the company is almost debt free. It already has 5 crore of the borrowing as of March 26. These are the other liabilities and fixed asset investment and other assets. Now we move on to the cash flow. So here is cash flow from operating activities. We can see that there is profit from operations mentioned. Now receivables, so the receivables is minus negative 7 crores, so the companies have sold their goods on credit as well. So now payables I also mentioned here. Now working capital changes. Now cash flow from investing activities, we want to check the investing activities. Here we can see that the company has purchased some of the investments over the last 3 years, and they've also sold relatively. Now moving on to the financing activities, what we can see is we can check the number of dividends that the company has paid. So the amount of dividends, so this is the dividends. What we can see is last 3 years they had paid dividends of 83 crore, 89 and 166 crores. So one thing you can look as that you can also look for the dividend paying companies, because apart from capital gains you can also earn through dividend as well. So dividend are always a bonus. So now if we look at the ratios, we can see that the debtor days are almost decreased over the last 2 years, and working capital days have relatively increased, and return on capital employed is around 104% as of March 24, and 109% of the March 25, and 122% as of March 2026. So lastly, what we can see is there is a shareholder pattern as well. So promoter is holding as of currently 64.15%, and FIIs are holding 7.48%, and DIIs are holding. And we can also check the distribution of DI, like the SBI Magna Mid Cap Fund has invested, Motilal Oswal Mid Cap Fund has also invested in the stock. So, and lastly, there is a number of shareholders. So if you want to do a more detailed analysis, what you can do is you can go to this concalls, and you can download the PPT here from here, and you can study and analyze it. So hope you like this content, and that's all with the today's video, guys. And just a short note that this video is purely for education, and it is not an investment or stock recommendation. So kindly do your own research before investing. Hope you like the video. See ya. Thank you.